Now time for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. First up, we got to talk about Rivian this morning, beating fourth quarter expectations and posting its first gross quarterly profit. Still, the electric vehicle maker expects fewer deliveries this year compared to 2024. Joining us now for more on RIVN, we've got Garrett Nelson, who is the CFRA analyst. Garrett, great to have you on the program with us this morning. How are you assessing these results from Rivian and this profitability marker?
Sure. The quarter was a positive. They beat on the bottom line. Was driven by stronger revenue, which came in $300 million above consensus expectations. This was really driven by software and services revenue, which is their agreement, the JV agreement that they recently signed with Volkswagen, which is a very high margin revenue stream. And that enabled them to generate a positive gross margin overall of about 10% during the quarter, which is a milestone, having been negative gross margin for some time. So still didn't help them on the bottom line with a profitability, but was a step in the right direction. Now, the negative was the 2025 guidance. And I think that's much more important. Obviously, what they reported for the quarters in the past, the market is forward looking. The sales guidance that they provided of 46,000 to 51,000 units for the full year actually implies a slight decline from what they sold last year. So I think that's why you're seeing the stock trade down pretty significantly here in the pre-market.
Garrett, what does it tell us a little bit more broadly just about some of that uncertainty stemming from the policies and changes here to incentives?
Well, we think there's a real demand issue here. We've seen EV growth slowing for some time. And, you know, if you're a Rivian and you're producing and selling roughly 50,000 units a year, it is very difficult to compete with a larger automaker such as General Motors or Ford, both of which sold over 2 million vehicles in the US last year. So you think about that, that's over 40 times the volume that Rivian did last year. So, and we're seeing in the marketplace consumers showing a lot of interest in hybrids as opposed to pure battery EVs, which of course Rivian produces. So they're fighting that headwind, and then you have the federal EV tax credit, which we think will be going away later this year when new tax legislation is passed.
You know, elsewhere in the world of EVs, while we have you, Garrett, it seems like there is some type of brouhaha forming, at least in the will they, won't they, in the terms of an investment potentially between Tesla and Nissan. You do have the denial that came out, that is fresh in recent hours as well, that a former board member at Tesla is ultimately kind of pushing back against this FT report here. So all these things considered, what are you anticipating could be the environment for EVs, knowing that you're going to have federal tax credits that get rolled back this year, and then also you have even more of the entrenchment that Tesla is looking to steer forward?
Yeah, no question. It's a difficult environment, especially if you're a small EV startup that maybe went public 3 or 4 years ago. Earlier this week, you saw a bankruptcy filing from Nikola. Last June, you saw Fisker file for bankruptcy. The cash burn rates are just unsustainable for these companies. So it's very difficult. It's a very difficult environment for Rivian, Lucid, and others. As far as the Tesla news, I think this is Nissan would like to do a deal with Tesla. We know that their discussions with Honda reportedly fell through recently. They're in a very difficult spot. They're like a lot of traditional automakers in that they've been losing market share for a long time now, both to Chinese upstart automakers, as well as companies like Tesla, who have grown their volume dramatically over the last few years. So Tesla hasn't indicated any interest in Nissan, but we do think they should take a look at this opportunity. It could make sense for them. A few years ago, they put out a long-term goal of growing their annual volumes to 20 million vehicles sold per year by 2030. That is a very lofty goal. And from our perspective, we just don't understand how they would possibly get there unless they make some acquisitions. Tesla has long showed a preference for greenfields growth, for organic growth, and they haven't done much of the way of acquisitions. The one exception being their Fremont, California factory, which they bought from Toyota in 2010. But this isn't really in their wheelhouse, to do something like this. But we do think it makes sense for them to at least look at everything. Makes sense at the right price in our view.
Garrett, I think at least from some of the initial reactions that I'm reading this morning, there's just some questions around the synergies, right? And I guess how quickly Tesla would potentially be able to use some of these Nissan factories. From your assessment, what does that look like? Is that a concern?
We think, reportedly, they're shopping some of their North American plants, and so we do think that makes sense for Tesla. The problem is Tesla really prefers to build from scratch, utilizing the latest in production techniques, robotics, and other methods to really drive down their unit costs and gain a competitive advantage over other automakers. That's what they've done. You've look at the Austin factory, Berlin, Shanghai, the new factory that they're planning to build in Mexico, all greenfields plants. So this would be out of the ordinary for them to buy assets, but we think Nissan is sort of in somewhat of a distressed situation, and we think they could potentially acquire those plants at the right price. So it's something they should look at.
All right, Garrett, great to talk to you. Thanks so much for making the time to join us.